fell into it. And it's very possible that you could have alternative minimum tax and not earn more than $50,000. So what Congress did, what this law did, was leave some what they call patches in place until they can fix it. It's very difficult to fix because it's in reality the second largest revenue producer in the tax system. So there's a lot of work that's going to have to go in order to keep that revenue generator in there, but yet not affect people who they didn't intend to affect it. Capital gains. Now, if you have stocks or even if you have mutual funds, and everyone should think about some financial planning, but the maximum rate on that was 15%. It was going to go up, so this law left it at 15%. And if you were in the 10% or 15% bracket, you paid no tax on it at all. So that meant that those people who were possibly, let's say, unemployed, but they had mutual funds for their own, I guess, not so much retirement, but building up their financial portfolio, and they sold some of it off, they might not pay taxes. That's what this would, it wasn't designed to help them, but it can help them. And that stayed in place because a lot of people across the country, still not working, and they're selling everything they can to stay afloat. So that one I thought was a pretty good one to keep in place. What we heard over the news was the estate tax. They changed that. It did go to 35%. With a $5 million exclusion, and it's somewhat technical, so I don't want to spend a lot of time on it. But the president did get a change to that, to where if you had a large estate, you would or you could pass it on without paying any tax at all. So now you will pay some tax.
Well, that's good. Well, it could be good if you have a lot of money, but is there a cutoff point? Like maybe you have a $50,000 in your estate, as opposed to 250 or 2.5 million.
Well, your estate has to be, I believe, $15 million to begin with. So if you had an estate under $1 million, and in California you can do that just with your real estate if it kept some of its value. And you would be sitting there being taxed at a very high rate. So it was a good compromise, although it did cause him a lot of, I would say, a lot of heartburn.
Yeah, he gave up a lot of his capital for that.
Yes, he did.
Yeah. So talk a little bit more about the benefit to small businesses, because that was one of the things that he talked a lot about in his campaign, making sure that small businesses thrive.
Well, one of it, there was a couple other bills before that, the Small Business Reinvestment Act, that did more, but the research and tax credits, those stayed in place. Those were going to go away. So if you had a small company and you did a lot of research and development, it takes time to bring it to market, but you get credits for that. It's a percent of your income. Small business stock, and this was important, is if you had a small business, let's say as long as it was under $50 million, that's what they consider a small business.
Wow.
Your stock you could sell. And to give you an example, I would have the ABC store that made widgets. And I decided, okay, I'm going to sell my company. You can have a sale two ways. One, selling all the assets. Two, or selling the stock. And then, of course, they get everything in the company because they own the stock. Well, if you sold the stock, then it would not be taxable at all.
Hmm.
So if you sold the entire stock in the ABC company for, let's say, $5 million, now you would pay no tax, depending again on what your basis was in that company. And your basis means what you put into it and what you've taken out up to that point that you've sold it. So you'd have no federal income tax, and in some cases, maybe no state income taxes. So you could actually walk away with that $5 million paying no tax.
Wow. You know, I find it interesting that they have that delineation for small business, because really I think of a small business as under $1 million. You know,
That's a tiny business.
it's a tiny business.
A
Okay,
very
so there's
tiny
so what
business.
about a business that's $250,000? You have one employer, one employee.
That would be considered a small business. California has programs for that. California's definition of a small business is, I believe, about 15 million gross sales
Really?
or less.
I don't know what I would be considered. I'm not on the map. Okay, we're going to come back with another segment from Anthony Sykes about the new taxes that have been put in place by President Obama.
Yeah, that surprised me too when I
Welcome back to Literary Speak. You know, on Literary Speak, we're all about being literate about every aspect of your life, and the taxes consume us around this time of year. So we're here with Anthony Sykes, and he's going to talk to us a little bit more about the new tax changes and taxes in general.
Thank you. Thank you. One of the things that are on board for 2011 is 1099s. If you're a small business, and right now they want to try to repeal it, but it's not. Any vendor or anyone that you've paid $600 or more to, you will have to issue a 1099. Also, merchant service companies such as MasterCard, Visa, and so on will be issuing 1099s for your 2010 return.
Really?
And they will be issuing it to you as well as letting the IRS know how much they've done. They've never done that before.